Have you ever wondered why prices keep going up, but your paycheck stays the same? Or how a company can be worth $1 trillion without ever turning a profit? Nobody teaches us this stuff, and that's exactly the problem. At Explain a Doodle, we fix that. The United States is $36 trillion in debt. That's $36 trillion. But here's the weird part. Economists say this might not even be a problem. Let me explain why. When you hear 36 trillion in debt, your brain immediately thinks, that's bad. That's really, really bad. But government debt doesn't work like your credit card debt. In fact, some of the wealthiest, most powerful nations in history have been heavily in debt. So what's actually going on? Let's break it down from the beginning. First, let's define it. The national debt is the total amount of money the US government owes, but owes to WHO. Here's how it works. Every year, the government spends money on military, Social Security, Medicare, infrastructure, education, everything. That spending is called the budget. The government also collects money, mostly from taxes. That income is called revenue. When the government spends more than it collects, that's called a deficit. Let's say the government spends $6 trillion, but only collects $4 trillion in taxes. That's a $2 trillion deficit for that year. To cover that $2 trillion gap, the government borrows money by selling Treasury bonds, bills, and notes. When you buy a US Treasury bond, you're lending money to the government. They promise to pay you back with interest. Year after year, these deficits add up. That cumulative total is the national debt. Right now, it's $36 trillion and growing. So who owns this $36 trillion in debt? You might think it's all China. Wrong. Here's the breakdown. About 75% is owed to Americans. That's right, most of the debt is owed to US citizens, companies, and institutions. The Social Security Trust Fund holds about $2.7 trillion in Treasury bonds. The government borrows from Social Security to fund other programs. The Federal Reserve owns about $5 trillion in government debt. This is from quantitative. Pension funds, mutual funds, and insurance companies own trillions more. They buy Treasury bonds because they're considered super safe investments. And individual Americans, maybe even you, own Treasury bonds in retirement accounts without even knowing it. About 25% is owed to foreign countries. China owns about $800 billion. Not as much as people think. Japan actually owns more than China, around $1.1 trillion. Other countries like the UK, Ireland, and Luxembourg also hold US debt. So here's the crazy part. America mostly owes money to itself. About 3/4 of the debt is held by American entities. It's like if you borrowed $100 from your left pocket and owed it to your right pocket. Why doesn't the government just not borrow? Why not balance the budget? Great question. Here are the reasons. Reason 1. Emergencies and crises. During the 2008 financial crisis, the government spent trillions to prevent economic collapse, bailing out banks, stimulating the economy, preventing mass unemployment. During COVID-19, they spent trillions more on stimulus checks, business loans, unemployment benefits, and vaccine development. When crises hit, the government can't say, sorry, we don't have the budget. They borrow and spend. Reason 2. Politically impossible choices. To balance the budget, you have two options. Cut spending dramatically or raise taxes dramatically. Both are political suicide. If you cut Social Security or Medicare, seniors get furious. If you cut military spending, defense advocates revolt. If you raise taxes, everyone hates you. So politicians do neither. They just keep borrowing. Reason 3. Economic growth strategy. Some economists argue that government spending, even if it creates debt, stimulates economic growth. When the government builds roads, funds research, or invests in education, that creates jobs, increases productivity, and grows the economy. If the economy grows faster than the debt, then the debt becomes manageable. Reason 4. Interest rates were historically low. For over a decade after 2008, interest rates were near zero. Borrowing money was incredibly cheap. The government could borrow $1 trillion and pay almost nothing in interest. So they thought, why not borrow cheap money to fund important programs? But now interest rates have risen, and suddenly the cost of borrowing is getting expensive. Okay, so 36 trillion sounds terrifying. Is it actually a crisis? Economists are split. The not a problem camp argues that what matters isn't the total debt. It's the debt relative to the size of the economy. This is measured as debt-to-GDP ratio. Right now, U.S. debt is about 120% of GDP. That means the debt is 1.2 times the size of the annual economy. Sounds bad, right? But Japan's debt is 260% of GDP. They've been fine for decades. The UK's debt after World War II was over 250% of GDP. They managed. Also, the US borrows in its own currency, the dollar. That means, in theory, the government could always print more money to pay debts, though this risks inflation. The "this is a problem" camp argues that just because we haven't hit a crisis yet doesn't mean we won't. In 2024, the US paid over $800 billion just in interest on the debt. That's more than the entire defense budget. As interest rates rise, this gets worse. Soon, interest payments could become the largest single expense in the federal budget. Future generations pay the price. Today's borrowing becomes tomorrow's problem. Eventually, either taxes have to go up dramatically or spending has to be cut dramatically. There's also the risk of a debt crisis. If investors ever lose confidence in the U.S. government's ability to repay, they'll stop buying Treasury bonds. Then the government can't borrow anymore. That triggers a massive economic crisis. Think Greece in 2010 or Sri Lanka in 2022, but 100 times worse. So what happens next? There are basically three scenarios. Scenario 1, keep borrowing forever. Maybe this just continues indefinitely. As long as the economy keeps growing and people keep buying treasury bonds, maybe 36 trillion becomes 50 trillion, then 100 trillion. Japan has done this for decades without collapse. The risk, one day something breaks. Scenario 2, economic growth outpaces debt. If the U.S. economy grows fast enough through innovation and productivity, then the debt becomes smaller relative to the economy. This requires strong economic growth, which isn't guaranteed. Scenario 3, austerity and pain. At some point, the government might have to actually balance the budget. That means massive spending cuts, significant tax increases, or both. This would be economically painful and politically explosive, but it might become necessary. Which scenario happens? No one knows. But the longer we wait, the fewer options we have. So here's the truth. The $36 trillion national debt is both a massive problem and potentially manageable depending on who you ask. It's not like your personal debt. The rules are different for governments, especially the US government, which controls the world's reserve currency. But that doesn't mean it's risk-free. The higher it goes, the more fragile the system becomes. One crisis, one loss of confidence, and things could spiral. The real question isn't, can we afford this debt? It's, how long can we keep this going before something breaks? No one has the answer, but we're about to find out. If this breakdown helped you understand the national debt, hit that like button. Subscribe to Explain a Doodle for more economics explained simply. No jargon, just the truth about how money works. Comment below. Do you think the debt is a crisis, or is it overblown? I'm curious what you think. Next video, I'm breaking down the Federal Reserve, how they actually control your money. Don't miss it. See you next week.